Hello there everyone, my name is Nasqualo and welcome back to my YouTube channel. Now in this video we're going to talk about this drop right here. What we can expect, some good news and also some bad news for September. So we really want to watch this video from the beginning and until the end. Also some price targets, what I'm personally doing and what I'm waiting for. So if that sounds like a great plan and a great video for you to watch on this beautiful Monday morning, then stay tuned, and as always, consider subscribing, consider hitting that like button. I always appreciate it when you like the video because it puts out the video into the algorithms, and just in general, some small token of appreciation is always much appreciated. And when you subscribe, hit that notification bell so you're always notified when I make a new upload. So we are moving downwards, but before we talk about technicals, price targets, etc., let's first talk about some news, and let me know that in the comments. Pause the video and tell me, should I begin with some positives or should I begin with some negatives? But I think that we have more negatives today than positives, so let's just begin with the positives. And that's going to be number one, small one, but nonetheless. Indian crypto market is growing, and the report shows that the crypto has 115 million crypto investors. So it is pretty cool because despite the it's actually growing despite the recent market downturn. So it is quite positive in terms of mass adoption, and that it's actually developing and that people start to understand the value behind it. The more people research it deeply, like what kind of intrinsic value this crypto provide, the more people start to invest in it. But that's small, but let's keep moving. The next thing is quite interesting, that Dubai regulator announces virtual asset marketing and advertising guidelines. And we know that quite a lot of big exchanges are also moving to Dubai because they are finding this to be the next big crypto hub, one of the biggest crypto hubs. So this is also similarly to the previous article that we've taken a look at. And now all the rest of the articles I have selected for today are going to be very bad, very bad. Are you ready? Okay, so, and before we do, I have to make a small shill. It's been a while. Guys and girls, if you want to be supporting the channel, if you want to be trading actively yourself, longing or shorting Bitcoin, number one, you have to be watching these videos. And number two, you have to be trading at a good exchange. And if you want to be claiming a huge, insane deposit bonus, then use my link down in the description of this video or in the pinned comment and claim up to $12,100 in initial deposit bonuses, up to $8,000 with BitGet, and up to $4,100 with Bybit. And here are other bonuses with BitGet that you will otherwise not get unless you use my link down below. And you can pause the video and take a look. It also includes a free course of Thomas Krallo, a paid course for free if you deposit a minimum of $500, and other bonuses that you can see right here. Okay, let's move back to the topic, and it's just... Okay, let's go. So, number one, a $1 billion crypto fund moving into Bitcoin and two Ethereum rivals as one major risk emerges, says the CIO. So basically what they're talking about in this instance is that the move to proof of stake for Ethereum might not be as good as a lot of people are expecting it to be. And here is also an interesting article which talks about the reasons why that is. There is a lot of FUD right now. This could be some propaganda, who knows. But anyway, Grayscale's supposed concern is that the merge might create a scenario where stable coins and tokens locked in smart contracts might become unredeemable, so you will not be able to redeem them. And a crypto investment firm also knows that token and stablecoin holders might panic and start liquidating their holdings. Such an outcome would create a substantial amount of selling pressure. So in a short-term perspective, what they're trying to say is that if there's going to be a small hiccup in all of this, it's gonna all tumble down the stairs, even though it's not gonna prove it. And actually also says this in this article, it's not gonna prove it as a failure. It's gonna prove as a short-term collapse and short-term cascading liquidations because of smallest issue of sorts. But again, they're testing everything. So will this happen? I don't know. I'm still holding my Ethereum. Okay, so let's move on to something more painful. And that is, this is actually not that painful, but MT Gox rumors panic Bitcoin Twitter as Bitcoin price returns below 20K. So as you might remember, this was about the MT Gox recovering like literally billions and billions of dollars worth of Bitcoin, like 130,000 Bitcoin or something crazy. But guys, as I told you before, and this article also dismisses it, and I agree with this article saying that we have so much trading volume on Bitcoin per day, 20 to 30 billion, that when 140,000 Bitcoin is only 2.8 billion, and it's going to be all spread out across bunch of days or weeks or months. It's not going to happen in the same moment, so I wouldn't worry about it. So it's kind of is bad news or good news at the same time. But now let's get into really bad news before we get into the technical analysis. Remember, guys and girls, that down below you can also go to offer.timescroll.com, and there are probably less than 20 seats left right now at my University Grade Trading Education with a minus 50% off. So if you want to become one of my proud students of Thomas Krallo, go and join that, go and enjoy that 50% discount. So why September is shaping up to be a potentially ugly month for Bitcoin. So this is quite interesting that historic data shows that September being Bitcoin's worst month between 2013 and 2021, except in 2015 and 16. At the same time, the average Bitcoin price decline in this month has been modest 6%. So we've seen that September has always been the worst return for Bitcoin, and the same thing goes for S&P 500, and we're correlated. So yeah, and in this instance, analysts argue that investors exit their market positions after returning from their summer vacation in September to lock gains. I don't know what kind of gains there are right now, but okay, or even tax losses ahead of year's close. And meanwhile, they also know that individual investors liquidate their assets in September to pay for children's annual school costs. I don't know how much that's relevant, but anyway. So, but we've seen historically that September has always been very volatile and very quite negative. So, and this is what we can start expecting here as well, unfortunately, just statistically. And we also have the elections coming up, which is going to be a lot of volatility as well. So September, watch out. And this is something we have to really keep in mind. Now, the same thing is the same already. So there is a lot of FUD right now going about September, and that we are at crucial support, that if we don't hold it, it's gonna be bloody. So let's take a look at the technicals right now. And you know that I have two charts with two different types of drawings, and right now our target was about 20k, and we actually broke this target. So congratulations to all of you that actually listened to what I said in one of my previous videos and actually kept your short trades when I was too busy eating ice cream in Barcelona, and actually personally made a mistake, even though I knew what I was supposed to do. But this should happen. So anyway, and you had beautiful short trades all the way from here because of Mr. Spot On. So call me Mr. Spot On down in the comments. But okay, enough of self-cheering. Let's just talk about what we are expecting. So certainly we are breaking below this red support, which is really bad, and we're also breaking below 20k, and we're starting to fight for this last support at 19,600, which is also quite historical. And this red one is the most important one because this is where it comes from, guys and girls. This is where it's from, and this red huge support, and we seem to be losing it right now. So the weekly actually has closed below, right here, below this red level. Let's take a look at the volume, and the volatility is expanding, but the volume isn't really that big. But quite honestly, it doesn't really mean much at this point because we're not looking at the breakout above, we're actually looking at the break below. So oftentimes the volume can be disregarded in these instances, from my personal experience over the past 9 years. So right now, if this 19,600 doesn't really hold, then our next target could be potentially, let's just mark these together. So I would say that probably just technically this is going to be the next one, but if we break lower, I don't really think it's going to be that powerful. And then last but not least is going to be this one right here, which is just our current local low of 17,600. So this is what we're currently looking at. And quite honestly, with all these expectations and just in general market stress, so to speak, and because of Jerome Powell, and thank you very much for saying that there's going to be some pain despite that we're potentially seeing peak inflation, so thank you for that. And it's all attributed to Jerome Powell, this move downwards from 22k all the way down to 19,600. So as of right now, my expectation would be trading in this vicinity. I'm not really, as I said before, I'm not really yet seeing this big reason to drop to something like 15k or 14k, which is one of my worst case scenarios for Bitcoin in general in this bear market. But right now, having seen us losing slowly but steadily these levels, we need to see either a strong pushback and close above 20k again, and stabilization above this area, and then hopefully going back above 21,800, that in this way forming higher high, and this would confirm that we are back into this whole trend of, you know, this side movish activity, which could be translated as accumulation period as well, by the way, in bear markets. So, but we cannot tell this until it happens. So for now, we're just hoping to hold 20K with these next targets at play. And if you're in a short trade, that's exactly how you can actually control it. But if you want to take a long trade from here, I'm nobody to advise you. I'm not a financial advisor, and this is not financial advice. This is how I'm seeing this, but I would be very careful longing any high-risk assets right now. So let me know in the comments, what do you guys think? And here's going to be a crypto course for beginners if you want to check it out. And as always, stay smart, stay rich, and I'll see you in the next video. Bye-bye.